So we talk about the very important stakeholders, which are the startup and spin-off companies, how they are suffering, how we can find the gap, how we can solve the gap, and how we can build them up and support them to reach the visibility and the exit level, and also to get attractive for the investors. We also have a very important stakeholder in our model, the co-investors. What kind of co-investors we work with, what kind of co-investors we are expecting to collaborate. So what are the main differences for us between the different type of investors? How do you see this?
I would start maybe not with the types, because as we discussed earlier, or maybe we can just say it right now, there are ways to work together with angel investors, with institutional investors, VCs, even in some cases corporate venture capital, and other investor types. I think it's about the value proposition, whether there are strong synergies between the investor partners, and we collectively invest a lot of time and professional services as well as capital from your side, Peter. So we have skin in the game. I think this is like the most important, how you can prove that you believe in something, that you have skin in the game. Yes. Otherwise, if we screw up, it will hurt all of us. And I think this is like the commitment and dedication, apart from everything we have said, our professional de-risking and risk mitigation is our core offering. And so I see two kind of investors that could be interesting. One is not so much domain specific, but maybe in their investment thesis, medtech is one, but they also have other deep tech focus, so they are not so much specialized. Therefore, they need a partner who does specialize on this.
Get the knowledge and the experience.
Exactly. Who has decades of experience in that segment. Why? To validate and to de-risk. So we can bring that to the table, but not purely as a service provider, because then that would be a weak...
it's no additional value, not enough additional value.
Yes, exactly. And then the other type is a deeply embedded into the medtech or biotech domain already. So we can double down on the segment, and most probably we'll find strong synergies in the execution part, in the regulatory, the go-to-market, the clinical, the testing, and all that. So I think this is the two ways to approach it. And because we are dealing with early stage investments, like pre-seed and seed mainly, at least in this region, therefore, even angel investors have a place on the cap table. And I think one great thing about angel investment or angel investors is they are usually very hands-on, and we need hands-on support. There is not such thing as too much support in early stage. But then if you look at the other, let's say, extreme on the scale, which would be maybe a corporate venture capital, perhaps from a pharmaceutical company, again, very, very valuable, because from that perspective, they can provide professional input and guidance on how to navigate and how to build a company that will eventually be very, very attractive for a pharma company, I don't know, maybe 7-10 years down the line. How do you see the other conditions of a ideal partner?
Yeah, I would also like to loop in family offices that are very specific on the deep tech and medtech. Usually they are already run by somebody that has exited or has family wealth deep inside. biotech or medtech, and doesn't want to go blindly with a VC, but wants to have professional investors, basically, to mitigate that risk completely down.
I see that family offices, they are extremely well representative in Singapore. In Singapore today, there is over 2,200 family offices, even 6 million population country. So it's a huge number of family offices. And I see that family offices, they're more focusing on the personal part. I was accompanied one of my biggest portfolio company to the family office event, so that they would like to spend with you a couple of days to know you very well. So the personal touch is very important for them. And also, it was very interesting that I seen many times family offices based on our family reason. They are focusing on a dedicated disease or a dedicated tech because they have some relationship in the past, or their family is related because of some illness or because of some other experience, or positive or negative experience. I see the family offices and as angels, they are not completely but significantly different than the VC and the institutional investors.
Agreed.
Also, they financial due diligence is a bit different, I think. So, and also this personal touch is a bit more important. And I see maybe this very early stage companies, they could be more successful, and not because of the ticket size, but because of this personal touch. If you find a very good founder and CEO, get this personality, they can present this impact. It's more touchable for a family office or angel investor than a VC. VCs, I think, based on my own experience, it is just numbers. They don't care about others.
I love that you brought in the family offices, and I think they are very much value driven and impact driven, and they also are deeply committed to whatever they are committed to because of personal reasons of the founder or the family. But on the other hand, they are very difficult to approach. It's not a quick game. It's a relationship, as you said. So I remember a couple of days ago you mentioned, maybe you can recap on your online event with family offices. And I had similar experiences when they shared when you get in contact with a family office, you must not talk about business first. Yeah, it's about values.
Build a friendship. Yeah.
Absolutely. And then if it resonates, and it's like a friendship, if it genuinely, authentically built up and there is a match, then of course you will find ways to collaborate. But it's not transactional. Whereas in the VC, it's absolutely in New York style. Like
go, no go.
Yeah, let's do this. Or
and an intro as well. Everybody said actually get an intro from somebody else that we know, our friends, our family, within or outside of the family office, that can vouch for you. That can basically say, "Ooh, this is a good one."
No cold emails, no cold calls.
No, don't send 14-page slide deck, anything like that. So really build up that relationship, and that was quite interesting to hear. Yeah.
Also, I see a quite difference between the same type of investors, for example, in the family office in Asia or family office in Switzerland. Mm-hmm. So based on these cultural differences, it's even more difficult, for example, in Asia, because the Asian culture, to build this friendship is even more difficult than in Europe or in the US, because of their tradition. So also between family offices, there are differences. Where is the founder is coming from? On the other hand, what do you see that who is the best partner for us? Because I see also a difference that I talk with many potential partners in Asia. As I mentioned before, that some of them who understand the model and how significantly we can decrease the risk, and it is the financial risk. We also decrease not just the founder's failure rate and professional failure of the company, but also the saving the money of the investors. If some of them, they understand, they are very happy, they're more than happy to collaborate, and they are very happy to see something new. But many of them, they just don't get it. Maybe it's I couldn't deliver the message well or not yet. But some of them, they cannot think out of the box because they are still in the conservative model. They are checking the numbers and it's good or not good. But they don't think about it. I don't know, how do you see here in Europe, because you have more connections here?
I had just remembered that in this year I got in contact with some high net worth individuals, very successful in the real estate, and I got introduced to them. So it was not like I cold emailed them. Somebody recommended me. So we started to talk, and our discussion naturally went into the investment side. And they considered themselves as experienced in investment. And then they had lots of questions about how venture capital works, which I quickly find out they have absolutely no understanding about, which is okay. I explained it, and they just couldn't get their head around it. They just couldn't. It was like, why, if you invest so much money, why would you only have 10% ownership or 20%? Like the whole logic how venture capital is built up was out of scope for sure. So what I learned, and I had many similar discussions in the past years, and I always got enthusiastic, like, this is a meaningful conversation, and it always turned out to be a failure. Yeah. So one thing I learned is that I would rather be very honest with myself and with the other person as well. Like, maybe I like you as a person, maybe we have similar goals, but the way we operate is so different that we cannot force it. So I think that's one thing I learned. But also I think, again, it's relationships. And maybe once we build up something bigger and we can present it, they would be happy to join in later. Yeah. They might be not our anchor investor types, not
the followers. Yeah.
Followers. And connecting on to the family office tactic, family offices are called by many investors patient money, because they have patience. So they have time. They are not VCs. They don't have time. They want you to work around the clock. But family office, they want to leave a legacy. It's a whole different story. And I think one way that I discovered is a nice way to build up a lasting relationship with the family office in terms of investments is to say, you might join in from time to time with a smaller ticket directly to one of the other startups that we invested in. And then this way we can learn about each other. We learn how we work, we get to know each other, we can fine-tune our collaboration model. And then if it works and we are aligned, then we can take it to the next level. And the next level usually is launching a VC on our own and position the family office as an LP who invests in the VC. Now, many family offices have tried themselves as a VC, directly investing. 99.9% of them regret it for life. They are not equipped operationally, due diligence,
mentality,
zero portfolio management. The mentality is brutally different. So, but then they are still playing with the thought, like we want to be involved. So I think the best way, and also from a capital leverage perspective, is them becoming LPs. And more family offices are also, next step, they realize they shouldn't do it on their own. So they form syndicates, family offices join together, 10, 20, 100, 200 offices, and then they work as a fund of funds and invest in several VCs. And I think this is the right way to go. But then again, it's very value aligned. Is this syndicate sharing the same values with us? Do they want to make an impact through Biotech and Medtech? If yes, that's already good. Then there is the geographical focus.
Yes.
We might share the same values, but they only invest in South Korea or Latin America. I don't know. So there needs to be, and then also geographical values and stage. Some of them, they are only interested in the growth stage, Series A, B, C, and some of them hopefully will be interested in early stage. So I think if we could, I think these are the like 3-4 things, if like quick check. But yes, it's basically we need to go out and spend time with these people, not selling anything, rather just to ask the right questions.
And offering an opportunity for them.
Yes.
Because I think that so many players on the market, they are able to work in this field and to make this objective risk mitigation. And I think if somebody understand what are the real risks in medtech and biotech, they can understand the support what we are providing. And I think it is the main goal.
Yeah.
And it is to help us to reach and support more startups.
Yeah. And thankfully, because I love statistics, and I read a lot of statistics and reports on VC to understand the trends. And actually our investment thesis and how we come together is very much supported by statistics lately. Because what happened in venture capital is that the successful players, they became giants, but their business model has shifted because they are continuously charging the 2% management fee for their LPs. And I just read like Andreessen Horowitz, which is one of the largest and most successful, they actually pulled in $700 million only in management fees because they are managing billions and billions. But then the motivation is not really aligned.
Yes.
Like if your entire business model as a VC is to charge the LPs for management fee, then you become comfortable.
Yes.
And values are misaligned. So, and also the return on investment decreases. So what is interesting is that micro funds and small funds, which is below 50 million euro, or let's say even 80, below that, they produce a lot higher returns. Yes. Why is that? Is because they're very, very motivated
and effective,
down to earth, and they cannot allow themselves to fail. It's not, management fee will not save you if you are running a 50 million fund. It just doesn't add up. You need to actually make miracles. So now LPs, the LP communities, they are also reading the statistics, so they learn. So there is a new wave of LPs who are actually opening up to emerging managers, managing small funds, first fund, second fund, below 50, below 80 million. So I believe, and also these funds must be vertical, domain specific. It cannot be an industry agnostic.
Yes.
That's over. So I think in each and every way, the way we come together and what we offer is supported by also the trends and statistics. I think we are in the right direction, in the right stage, and I think this should be our narrative, because what we are doing, we are, as you said, Peter, de-risking, executing, and actually eventually producing higher returns and making much more impact.
Yeah. Hopefully the life will prove that we were pioneers in this field and can introduce the really good and successful model for the ecosystem. And I can just wish good luck and health for all of us. And we will continue from here. Thank you for your presentation.
Thank you.
Thank you, Peter.